This is Professor MoneyPig, and today is November 16, 2020. So I know the market is a little choppy lately, so just want to have this 20-30 minutes video to explain our swing trading strategy and the market outlook. So originally we expect November 3rd is the US presidential election. So we did expect that the market is probably going to sell off potentially because we are going to have some legal battles after the election result for the election results, which did happen, but it's kind of different compared to 2000 U.S. presidential election where there was only one state, and the number of votes I remember correctly is like 537 votes difference between two parties. So it was pretty close. And in the previous video, we mentioned that it's actually causing SPY to sold off back to 2000 after the election until mid-December. But this time, I think the situation is very different because on November 3rd, it's kind of clear that GOP is going to take Senate. So, and also at that night, President Trump was leading the election result, was on the winning side. So I think the market thinks like they're not going to see the blue wave, which means Democrats are going to take control of the House, Senate, and the president, the White House. If that's the case, they think Democrats could potentially have some tax reform, add some more tax, higher the corporate tax, put some more restriction on the big tech companies. So, but that didn't happen. So that's why the market actually pushed back up on November 3rd, November 4th, right after the election, big time. And I was called on that particular date on our swing trading portfolio. Gosh, it's kind of late. It's like 11:27 p.m. So can talk. So that's why the VIX actually dropped a lot. And because I was anticipating VIX to push up because of the all these controversial election results. So I actually position like a mid-size of a VIX and VX's call, if you remember as well, and realize the results in that way. I quickly changed, close most of the VIX and VX's puts, call, and switch into puts, and we actually got a few 100% return during these days. And the market after the election actually keep pushing up until this day. Pfizer releases vaccine, COVID-19 vaccines, which totally turned the market. It was a really weird day that we had a really big gap up at the market opening and a lot of profit takings down the road. And also on that day, we have a lot of COVID headline coming up. So like market just like jumping between yes, we have a vaccine, but there's more lockdown coming. And also there's a record number of COVID cases here and there in different states. And the whole week, that was a Monday, November 9th. Then basically what happened the whole week was bouncing like this. So making swing trading very difficult. It's like a lot of work from homes. One day is like jumping 5%. And the other day, there potentially some vaccine headline, and those work from home days just like drop 5%. So we have some swing trading position like cloud names like Fastly. It just got like washed out like twice, right? I was pretty frustrated with that as well. So that's why I mentioned in the weekly email, we'll try to avoid those names for now because they're just like tipping here and there. I mean, there are more stable names to play compared to those names. So from now on, at least on swing trading, I will try to avoid alerting any of these cloud names because the nature of the market just bouncing between the COVID vaccine headline and work from home. And also a lockdown or record cases headline just bouncing between, which makes those work from home flipping all the time. So looking at Pfizer, Pfizer totally sold off on the top after their good vaccine news released on November 9th. Once we had a really big gap up, just a lot of profit taking. Part of the reason is because it is a good vaccine, 90% efficacy. They collect the data early, so they only had like no 90 COVID infected case in the I think 30 or 40,000 participant clinical 3-stage study. But originally they wanted to wait until like 120 patients confirm COVID in that study, then they will stop, but it will take more time. So they ended up just do the analysis early on and report this good news. But what they have to do now is to test more into like minority groups and also like pregnant women and also some children population, which they haven't done the test yet. So in order for FDA to approve this vaccine, they have to report all these populations. So I think for them to collect data will take another month or two for those pregnant women or all the other groups that we just discussed. So yeah, expecting they are going to send it to FDA for emergency approval probably 3 weeks from today, 3 to 8 weeks from today. So FDA will probably take, I don't know, a few weeks to review it. Maybe they'll get it faster since it's so urgent, maybe a week or two. So I think the earliest time we can get some emergency approval from FDA is like probably early December for Pfizer, or possibly it will be roll into early January 2021. So that's something to look at. And the problem of Pfizer vaccine is too limited. So first you need 2 dosages, which is actually good for Pfizer business because if every year COVID just come back with mutation, you will need 2 dosages every single year to have to be immune to COVID. The major problem, in my humble opinion, is this vaccine needs to be stored in the -70 Celsius environment all the time, doing the transportation, and that particular specialized box for vaccine, Pfizer vaccine, can only be opened twice a day to maintain that temperature. So there's a lot of limitation, make the logistic like extremely difficult. And I think the market, knowing the fact that Moderna mRNA, their vaccine is actually coming out very, very fast, which actually come out today. So I think that's part of the reason Pfizer is selling off so hard after the vaccine news coming up, and further sell off today after Moderna released even better vaccine news. Like their COVID vaccine actually showed 94% efficacy, which is super awesome because FDA actually only requires the vaccine to have 50% of efficacy. So as long as Pfizer and mRNA, their vaccines don't show strong side effects and or don't show side effects among like pregnant women or children population, which they haven't done throughout testing yet, I think there's a really high chance these vaccines are going to be approved by FDA. And the major advantage of Moderna COVID vaccine is they only need to be stored in the normal like refrigerator temperature, like I forgot the temperature. I think it's like 4 Celsius or something. So the requirement and logistic difficulty compared to Pfizer vaccine is way lower. So that's why Moderna vaccine looks actually the most promising right now, and the cost should be relatively lower. One thing I mentioned, so we actually issue mRNA swing trading, I think on November 10 and 11, and actually resulting in a 450% call return on our call option, which is pretty decent. The reason I sold off, close all the call options, because Moderna, every time there's a headline, it pops and always pull back to this around 50 daily EMA. and I'm expecting the same thing's gonna happen this time as well. So yeah, that's why I've just closed all the call position with nice profits and just move on. The next one, I think that's potentially going to release some good COVID vaccine news is SRNE. So that's why we're swinging some 10 calls into December 18. But because of knowing this COVID vaccine timeline is always quite uncertain, we might have to roll over to like January or something, and we'll see. But typically, I really like the chart because SRNE always hold on this green line, which is the 200 daily EMA. And right now it's curling on this EMA support. And I think any news or, before any news coming out, we should just start to see it push back up to around $12. So that's why we're issuing this swing trading alert. BNTX, we're currently not trading it. They are the partner with Pfizer to ship and invent and develop that vaccine together. So because of the Moderna good news on COVID vaccine, BNTX is also selling off as well. I do expect a little more sell off, maybe to $81 on this EMA support. Probably a good day trading candidates for swing trading. Maybe the option contract will just be more expensive. The other one, I think, at least in my opinion, that could have a push up for COVID vaccine. Good news is Eli Lilly. Before they actually got a hit because they actually had a pretty serious side effect in one of the participants in their stage 3 clinical trials. So they actually stopped the trial. And then they actually resumed the trial. But the Eli Lilly stock prices got a big sell off in this area. And this sell off was just because of the Alzheimer drug was not very successful from Biogen, and actually also pulled down Eli Lilly as well. And then also they had earning, and now Eli Lilly started to push back up. I haven't issued any alerts on Eli Lilly because of their previous case being kind of serious, which is kind of normal among clinical stages, because clinical trial stages, because there are like 4 or 5 digits of participants. It's really hard not to have some serious side effect for like a small amount of participants. So that's pretty unfortunate, but hopefully that won't be the case. So we have more vaccine, selection for this pandemic. But we'll see how the Eli Lilly goes. I have to dig into other COVID vaccine pipeline. If you know any, please feel free to just bring it up. There are just too many of them in the pipeline, and each of them has like a lot of details to deep dive into, which I really don't have time at the moment. So yeah, that's the COVID vaccine I want to mention. So the next topic I want to cover is the work from home NAM, and then I'll quickly cover the semi and also consumer electronics, and then I'll mention the travel NAMs and also natural gas, EV, to conclude this talk. So next one is work from home. So it's really tricky to trade them, as I mentioned. Let me just pull their chart really quick. Zoom, Netflix, FLX, Peloton. I will choose Fastly and Datadog. So when during the COVID lockdown, you can see all this cloud name actually got a lot of boost. I also put Baba here. Their stock price actually ramped up pretty nicely because when you work from home, you have to use a lot of cloud services, and the market just think they are going to benefit from this work from home trend, which makes sense. Fastly has a crazy move back to September. We actually hit some Fastly. I think it was on Twitter, and also Baba had a really nice run since April, like all the way straight up. But now we're seeing this COVID vaccine is pretty much coming up and likely to be FDA approved. So we are starting to see some sell off since the COVID vaccine news. But like I said, the market is actually just flipping between, yes, we have a COVID vaccine coming up. We don't know when, but we think it's coming up. But in the meantime, we have recorded COVID cases keep coming up, and there are some states, United States, local state governments started to issue stay-at-home orders, or just like a kind of like partial lockdown. So these cloud names, Baba, Datadog, and Fastly just like keep bouncing back and forth, making it really hard to trade. One thing to mention about Baba is they also have e-commerce components. The other reason they got really sold off really hard is because N Financial IPO, which is the fintech arm of Baba, was stopped or halted by mainland Chinese government because they think they don't really follow the regulation, or on the other way, they just think Baba and financials are too big to control, so they just put a lot more regulations. And now they're going to put a lot of antitrust regulations and laws for those big Chinese e-commerce and cloud names. This is kind of interesting. Let me show you really quick. Even though the antitrust news coming out, but the stock price like JD is still holding relatively well compared to Baba, which is like directly sniped by the mainland Chinese government about the N Financial IPO. That's the main reason Baba is selling off like really hard. Baba 260 is a critical level, so below that we are expecting further push down to 150 first, and still doesn't hold this EMA support. We do think it's gonna push further lower. So we have to monitor how the things going in mainland China to see how much Baba might be sold off. I do expect some bounce back once we hit a 250. So it's probably more like a short-term swing trading if we want to do that, or I'll likely just alert it in the day trading service because this is such a short-term trading. But anyway, so yeah, I will try to avoid alerting all those work from home names for now because they're just too choppy. And the same thing with Teladoc, which is the biggest phone doctor appointment provider in the United States. Ever since we are having this COVID vaccine coming up, it's a big gap down and forming a bear flag. It's currently holding this 200-day EMA support. It might be a good put swing trading candidates. If this 200 MA cannot hold, we have a lot of room to the downside. Could be trading in the pre-COVID, price range around, $70, $80. So potentially we still have like $100 drop, but I don't think we're going to drop that much because even though we have vaccine doesn't mean we can control COVID as a pandemic. It might take time, and even COVID gone, it might come back next fall and winter. So I do think Teladoc, and now people are used to this telemedicine, and it's kind of like a revolutionized process. A lot of, at least my experience, a lot of doctors and hospitals now are more willing to accept this telemedicine. So I do think Teladoc business will start to do better than the pre-COVID area. So I do not think it will sell off to $75, but possibly around this like $100 area. I can see that could happen. So definitely keep an eye on it. But while Teladoc is selling so hard, but actually Roku is holding out relatively fine, which is pretty interesting. So, and I know Roku has a pretty good earning project, have provide some good guidance, and that's part of the reason. And also this earning season, they actually have some positive earning results. So I'm not very surprised they hold out, but compared to other work from home name like Zoom, which is super overpriced, but still have good earning, is actually having a pretty big downtrend channel, holding this 100-day EMA support at 370 area. So below 400, we do expect this week is going to push further down. I do think we have an opportunity to sell down to this 260 level, which is 200 EMA support. But Zoom is always very choppy, moving in this downtrend channel because a lot of institutes really like to buy Zoom. So if you buy the naked put position, sometimes some big institute just come in and buy it and just push the price up. So probably we have to always do this like 2-to-1 put to call position to kind of hedge and like protect our Zoom naked put position if we want to swing it. On the other hand, Peloton is holding this $100 support. I do think Peloton's going to be the same thing, kind of choppy, at least for this week, based on my model. It's probably going to be pinned around the $100 area, and then we'll see what happens, whether it will continue to sell off to the $60 support, 87 first and then $60, or it will start to bounce back a little bit. Inclined toward bullish neutral, because with this COVID lockdown, potentially lockdown or partial lockdown, I think people were still using Peloton. And I don't think people will start to feel comfortable going back to gym maybe until summer next year. So I do think Peloton still have some opportunities to push it back up. And also a lot of institutes really like to invest in Peloton. So I do think Peloton has some potential good results. And Netflix is the other thing I really like. It's currently trading this range for since June. Pushing back up, down, push back up, down, up, down. So now it's in the bottom of this down range. So if it holds up, we could see slowly push back up. But notably, we have to be careful, like this COVID headline. When the COVID vaccine get approved, maybe Netflix will get a pretty big sell-off again, breaking this 200-day EMA support. So again, this is kind of like a work-from-home concept related name, so really no action right now. The next category I'm going to cover is the consumer electronics. So Apple, TSM, and also semiconductor, NVIDIA, AMD, Micron, Qualcomm, AVGO, XLNX. Okay, so really quick, Apple has been pinned in this range 120 for I don't know how many days, about 2 weeks. In my opinion, it's actually forming this bullish flag. We just don't know how long this sideways consolidation will take. We have witnessed tens of millions of call options being opened by the institutes every single day for about 3 weeks. So I do think they're expecting something big. Based on the data that I currently see, iPhone 12 sales is actually pretty good. So I do expect the next quarter, Q1 2021, we could see Apple will have a good earning. But right now, because of market choppiness and, Apple refused to provide guidance in the last earning because they said COVID just created too many uncertainties. So that actually put a lot of pressure on the stock. So currently, we don't want to swing it unless it breaks this range. We might play some, a few days or 1 or 2 weeks away the contract just to scope it. But based on what my analysis just said, TSM Taiwan Semi actually create all the materials for all the chips. They are breaking the range and push all the way to new time high. And I do think before year end, we should see 110. And we're hitting this call swing trading position pretty big because I think a lot of first of all, it's in the seasonality. In their bullish cycle, Taiwan Semi always push up all the way to the end of mid-December. Because after iPhone release, there's just a lot of consumer electronics require new chips, will require Taiwan Semi to provide materials. NVIDIA, on the other hand, is currently in this slow uptrend. So based on the last technical play, we actually played this range. We had a pretty successful trade, 100% really quickly. But now it's pulling back down, especially the COVID headline. People think NVIDIA, one of the major business component is the gaming industry. People might not play as many video games as they could after the COVID pandemic's gone because people don't stay at home. So this COVID vaccine news does hit Nvidia a little bit last week. So right now it's a little choppy, so that's why I don't want to touch it for now. Similar reason for AMD as well. And also Nvidia and AMD, they are both trading really, really high forward P/E ratio, meaning they are very overpriced. So I'm hoping to see more pullback, maybe to the bottom of this down channel, like around 500 to go any long swing trading position. Same thing with AMD. I'm hoping to pull back to around 75 level. That would be a cheaper and safer bet, even though it's currently holding the EMA support and kind of forming bull flag and pushing up. So we'll see how it goes. Same thing with MU. MU kind of similar to TSM, has a good seasonality. This name is kind of tricky to trade because they are actually the semi name that has the worst earning results, financial reports. So that's why I typically don't trade it. But when it moves, it really moves. So right now I do see 67 as a potential target in the next probably 2 to 3 weeks. It's kind of too late to chase it right now since it has been pushing up. Maybe we can still get 100%. I might issue a swing trading alert. We'll see tomorrow. Qualcomm is a 5G and semi plate as well. It's currently holding the EMA support, being pinned this range for a few days. I'm waiting for this all-time high to be broken, to have a continuation to the upside to issue any alerts on Qualcomm. The same thing with AVGO, and also the same thing with SLNX. So the next one I want to cover really quick is TravelNAND. Jeez, I'm so sleepy. Wake up at 5:50 and now it's almost at 12. No nap in between. It is not fun. UAL, CCL, RCL, MAR, Hilton HLT, TradeAdvisor, Expedia, EXPE. Okay, so first of all, the first thing to recover from any COVID vaccine will be hotel names because most of the revenues, about 60 to 80%, depends on the brands, are coming from business travel. So once we start to go back to office to work, hopefully sometime next year, the business travel will be the first one to recover. So that's why the hotel is actually leading all this travel name recovery, and same thing with those booking names like TripAdvisor, Expedia. They are actually the leader of this sector. And that's why Marriott, we are actually seeing a really strong push as if there's no COVID. But Marriott is actually still trading below the pre-COVID price. But I do think once we have an FDA approval vaccine, like we are going back to like 153 all-time high, like in no time. And Marriott actually has the strongest financial reports. I'm really surprised. In the earning on November 6th, they actually offer positive earning per share. Geez. I thought that would be a pretty negative EPS and pretty bad guidance, but the answer is no. They are actually doing really well. And one day after there's a COVID vaccine news, and they just push out like crazy. Too sad, so bad. Like we haven't started long a lot of their equities because I didn't expect Pfizer vaccine to come out this quickly. Same thing with Hilton, another strong hotel name. Marriott is the biggest hotel chain in the world. I think Hilton's second or third. I forgot. On the other hand, the second one to recover, the second tier, will be the airline. Because airline, like hotel, about 70% of the revenues are from business travels. So that's why they are expecting airline actually to recover, especially airlines with a lot of domestic business travel requirement demands, like Southwest will be the strongest recovery down the road. They are all holding EMA support, forming a bull flag to pushing up. I do expect to pull back down like last week we had COVID, Pfizer vaccine reach the top and pull back for 4 days. I do expect the same thing could happen. And if that happens, I do think it could be a good opportunity that we start to add some long-term investment positions for these names. It's a small size. I do expect they might pull back a little more because, during all this COVID lockdown, the COVID vaccine news might not be that positive. Then that can put a lot of pressure on these names. But what if like COVID vaccine just got approved by FDA like mid-December, right? Like Southwest will go back to, their all-time high, like 58 really, really fast. So that's why I kind of don't want to miss the upside. Like maybe I'll start to long some position once they pull back, I hope to $40. So that will still give us about 50% of the upside. Or, long some call position with the really, really, loose stop limit in the hope that, like, I don't know, like 2022 call in the hope that we can capture that recover of airline with good profits. The cruise line or any names with international travels or any airlines that have a lot of revenues from international travels, I think that will be the last to recover because that will be the least, because it is, first of all, is not necessary, a necessity, and also it is just not, people will do business travel first, and the international travel, all the regulation restriction will be loosened, I think, as the latest, as the last one. So that's why we are seeing a lot of this cruise name just got pinned at the, very low price level. The other reason, especially for CCL, we actually, because they have some common stock offering, which just bring down the stock price a lot and killed our call swing trading position, I think, last week. RCO has a better recover, but still not as good because this is basically international travel. So I think it will come back as the last one in the travel names. So for now, I don't think we should loan them. The one we should start to loan is like this name and also like some restaurant names like Play, Cheesecake Factory, which is pushing back quite a bit. Again, the same thing with Play. We are still trading about half of the price to all-time high. So I might start to issue some long-term investment position once we pull back down again to $20. I think that'll be a good opportunities. I definitely regret, like, I was holding $12 Play, and because all the choppiness and the COVID, situation was not very clear, I actually take the profit at $14. If I hold it until today, it's like 100% already. So, and the other ones like Cheesecake Factory as well. So we'll definitely start to loan this name, add them into a little bit of them as a startup position in a long-term investment opportunity. Next one I'm going to cover is natural gas, UNG. Unfortunately, we lost the UGAZ, UGAS and DGAS, which are very good ETN to trade natural gas. But they have been delisted because they don't track the natural gas future very well and cause a lot of financial dramas among people. So they are just being taken down. But now winter is coming, so natural gas will be very weather driven. I'm closely watching the weather service, which we formed a partnership with this HFIR Weather. It's a good friend of mine. So basically, for the winter natural gas, all we need to look is this TDD, temperature degree day, to see the natural gas demand. Yeah, if the demand's good, if we go back to like plus 10 or plus 20 in the long range forecast, you will see natural gas start to push back up. And right now it's pulling back down because the temperature is actually turning warm in the lower 50 states. So that's why natural gas is kind of pulling back down. If you're interested, feel free to reach them out through email. They were happy to honor 1 month free for the first month. And yeah, in winter, natural gas is 100% weather without this accurate ECMWF slash EPS weather model. Trading natural gas is like traded blindly. In winter, the technical level doesn't matter. It's all weather driven. When the weather report is released, like 11:30 p.m. Pacific time and 6:30 and 11:30 a.m. Pacific time, that's the weather model release that will change the natural gas price dramatically. And if you look at the weather on the other way, is you have to look at this 2 to 4 weeks of a long range outlook. So currently the cold air is in Alaska and also Greenland, so it's kind of trapping the warm airs in the lower 50 states, and that's why we're seeing natural gas being pulling down. If we're seeing the 3rd week and 4th week, it's pretty much the same thing. So that's why natural gas is trading lower. Week 5 or 6 or beyond, usually the accuracy of the model is pretty low. So the value is actually pretty low. But basically, you can see that the weather is still pretty warm in lower 50 states in week 5 and 6. That if still happen, that can put a lot of pressure to natural gas. I might send out some natural gas call or put position on UNG, which is a natural gas ETF, or other natural gas name as well. So it might not be swing trading alert. I'm not sure, because usually those positions will have to be in and out quickly. So it depends on how the weather trend. I might mostly send in day trading alerts, but potentially some swing trading alerts if I see it's suitable. But usually I change based on the weather model dramatically. So we just have to take out the position like probably within the same day, within 12 hours. So it might not be a very good swing trading position. Last and the most, I want to cover electric vehicle names. They have been pushing up a lot. I'll put the Tesla first. NIO, Lee, XPV. We're making good money from here as well. KACC, I forgot. WKHS, BONK, and Solo. Okay, so what happened is Tesla has been pinging this range as my model suggests. And today we actually see Tesla being being included into SP 500. So the stock price actually, skyrocket to 460. Those Chinese EV names, electric vehicle names, are pushing up because their earnings are pretty good. And also there are a lot of institutes interested in those positions. They're buying those positions like crazy. Every week we're seeing tens of millions of calls being added into those names, and really boosts up the price pretty well. And NIO, Lee, XPEV are the 3 EV names in China, mainland China, that people think they're the Chinese Tesla. So there's a lot of bullish speculation into them, and a lot of people, even retails, are chasing as well. Which in some extent I agree. But actually the only one that can compete with Tesla, at least in my humble opinion, is XPEV. Because their car price is about $27,000. And one thing a lot of people in the United States don't know is in Shanghai, you need to have to wait for a special license to get a gas vehicle to drive in Shanghai. If you don't want to wait, which will take forever, is you have to purchase a license, which will cost about $15,000 per gas vehicle. So which is super expensive. So if you want some like better brand, let's say if you want a Honda Civic or something, right? I wouldn't even say Honda Civic is the best brand, but let's just say Honda Accord, you paid about $20,000 per car, and then you add that gas vehicle, license, which is 15,000. That bring your car to like 35,000 already. So if you have, let's say Toyota, Rav4, you paid about 25,000 or 30,000, depending on the model you get, and then you pay this 15,000, easily 45,000. And Tesla is only 50,000, so that make Tesla really really competitive because Tesla, if you drive a green energy vehicle like Tesla, you don't really need that $15,000 of gas license in Shanghai to drive. So that's why Tesla is so popular once the Shanghai factory finished, and that's why the stock price has been pushing out so much. XPEV is the only one that can compete because they are charging about $27,000 per car. So that's about like half of the Tesla price. Neo, on the other hand, they're charging, I think the cheapest model I remember correctly is about $60,000, and their battery you have to rent them. Not to mention their battery capacity is not as good as Tesla. So I really don't think Neo will be a real competitor to XPEV. Lee's car is not bad, but it's not as the production is not as large scale as Neo or XPEV. So the most common EV on mainland China's road is XPEV and Neo. So that's why the institutes are actually betting more on XPEV and Neo these days. But in my humble opinion, XPEV is actually the best bet in the long run. This week we're seeing a lot of call options buying into Lee. So that's why we choose Lee as a swing trading shorter term swing trading position. Neo being sniped by Citron last Friday. We had a really nice day trading on Neo. But now it's pulling back for the earning tomorrow. I do think Citron's going to come back. They always come back to sniper the names that they try to short and get a lot of profits. So have to be careful. That's why I haven't re-entered Neo since last Friday. That will have a failure re-entry. So just be careful of that. I would incline to do more Lee and XPEV down the road. So that's part of the reason. And if someone asks or curious, I'm not from mainland China, but I do speak Mandarin and I do a lot of studies, so I know all these details and also learn a lot from my friends by chatting with them who live there or who works in the auto industry in China. Workhorse currently is being pinned this range. Currently have a small uptrend going, but we don't know how long this uptrend can maintain. But it will definitely be an interesting long because every time they push back up, they kind of curl back and exponentially back up to this $30 level. So it can be a technical play. This name Blink, I really like Blink Charging. Currently we're doing some day trading on it. Once we hit this all-time high 1415 maybe this week based on the Tesla news, I might add some put in the day trading, hoping it will push back down. And I'm really hoping the long run we can dip back down to $6, and then I'll add some of them into the swing trading position, long-term investment stock holding position, because I do expect 10 years later, Blink will be a company trading at like $20, $30, $40 a share, because EV is the trend. Even though in the remote areas, I think we still need gas cars, but for the city commute, I could see like 10 years later, it's mostly EV cars in the city. So charging names like Blink, I think will be a pretty good bet in the long run. Solo is doing pretty funnily, pushing exponentially up. We have to keep monitoring to see it will pull back down like it always does before, or it will be like Neo, like exponentially back pushing up and never come back. KCAC is solid state battery startup that they formed this KCAC as a public company, and they're gonna acquire this solid state startup. It's mostly just a speculated play that because the merge, they're gonna have a board meeting the end of November. So they're talking about the merging price is about acquisition price about $25. So I do expect the price to slowly pushing back to $25. So loans on stocks can give us some nice 25% return potentially. Possibly we can push up to $30 with some short squeeze and retail chasing, but 25 to 30 will be more risky. Definitely will take some profits at 25 or most of the profits at 25. But it's not a good long-term investment because this solid state battery, which potentially can totally beat Tesla or other lithium battery. But the problem is they won't have a mass production until 2023. So it's a very binary investment. Either no product, or the product is not competitive at all, or like super super innovative, totally wipe out the lithium battery kind of play. So if the latter happen, we possibly can see KCAC trading like $100, $200 a share, like by 2025 or something. But yeah, we have to see how this name play out. But right now, just a short-term play. The other name I was going to mention, since we mentioned about battery, is LAC, which is a lithium play in ETF. Currently is curling on the EMA support and breaking the range. Like last time, we had a successful play. Possibly we'll loan a little bit of a position tomorrow to swing trading it and hoping it will test the all-time high around $17 range. One more thing I was going to cover is the marijuana. Hopefully you're not tired of my voice. We had a really nice win on marijuana names. After election, the huge win on Friday, like we hit like several 100% because people, in this U.S. election, 5 more states actually legalized marijuana. So what happened is that's a really big news, and now with potential, the Democrats control the White House, and there's a Senate re-election in Georgia in January. If Democrats can retake the 2 Senate seats in Georgia, then they can control all the Congress and also the White House, and potentially they might legalize marijuana in the federal U.S. federal government level. That will be a huge news for marijuana. So right now, marijuana name pushed really high after the presidential election that Biden was or is leading, and then it didn't have any follow through. So we had a big win these days, these 3 days, and made a lot of money. And now just we try to roll up, but unfortunately just don't have any follow through and pull back down. But be careful, in January we might reissue those alerts. We can see those marijuana names can be pushing either up or down based on the Georgia Senate re-election in mid-January. So definitely keep that date on the calendar. That will be a pretty important play in January. And the other one to look at, first similar to marijuana industry, is the solar industry. If we can see a blue wave, Democrat control the Senate, potentially they're going to put more green energy as the emphasis. So we can see more upside for all this energy names. Solar names. We actually hit pretty big on this solar name plug on swing trading, had a pretty good guidance, and it just pushing back up. And today had a common stock offering and just killed our weekly day trading position, and currently is trading at 23 and break this uptrend. So we might issue some put swing trading on plug. But we'll see. And JKS currently had a really nice run and then just pulled back, and now just sideway consolidating for the earning this week. And Ron had a okay earning right now, sideways consolidating as well. So I think the solar name could see another run after this consolidation finish, potentially into January, once we know whether the two seats Senate in Georgia will be election result will be, and we'll see that will kind of dominate the solar name. So we'll have to watch that election, and also back to SPY really quick. That is actually a key event on top of the COVID-19 vaccine and COVID-19 lockdown and number of cases is if Democrat reclaim the Senate after the Georgia re-election mid-January, I can see it's going to benefit, make marijuana and solar names very bullish, but I do expect the market to push up in the near term because the market will expect a really strong stimulus package coming up since Democrat, if they control all the Congress and the White House. But I think in the long run, very likely, if they control the governments, they are going to put some unfavorable tax to corporates and even stock trading or stock exchange. That will put a lot of pressure on the stock market, like I mentioned in the beginning. And also, what they can, I was going to say something. And I think also what might happen is they could put some antitrust law on FANG or big tech companies, so that can further put a lot of pressure on those FANG stock price and therefore on SPY. So I think down the road in the next 4 years, and especially, unfortunately, U.S. is so polarized on the political point of views. So I think in the next 4 years, the market won't be as stable as the past 4 years, where pretty much there's a lot of favorable tax treaty or tax rates on corporates, and Federal Reserve just like pushing the stock price, making the bubble bigger and bigger, with a lot of QE or whatever you call them. In the next 4 years, I anticipate to see a lot of these uncertainties between those monetary, physical policies and also U.S. international policy that can dramatically change the stock price, make the market very volatile. So I do think if you want to maximize your revenue, or just be lazy, like just long SPY, it won't work as good as in the past 4 or 10 years. Yeah, that's just my humble opinion. Especially 10 years ago, we had a really big sell off, and if you hold SPY, at SPY in 2011 and just hold until today, the return is probably pretty good, like 200-300% over the 10 years. But now without any major sell off and major correction, I mean, we have one in February, but it's only like 20-30%. But I was talking about like 50-60%, like 2008. It didn't happen. So right now, all the assets are super expensive. And now with all this uncertainty, possibly the market is going to chop it a lot of times during the next 4 years. Just holding SPY naively without adding other positions as your long-term investment might not be as good as you would think compared to the last 10 years. So yeah, that's a long video and that's pretty much it. Thank you for listening and feel free to reach out if any questions, and thank you and have a great day and happy trading. Bye bye.